Hello, YouTube. The S&P put in one of its best days, if not the best day of the year. We are up by 2% on the S&P and 3% including after hours with the NASDAQ. So it has been a truly incredible move. We are right back here to key resistance. And this is going to be so important because the weekly chart closes out tomorrow. And we now have a failed breakdown. That's usually pretty bullish. We also have elevated volume for it only being Thursday. And then we look here to the monthly chart, and what do we note? Well, it's not a failed breakdown anymore. This is a breakout. So this is going to be very important as we look forward to the rest of the week, which is just going to be tomorrow. We bounce perfectly off 404, which is a key support area that I had laid out. And the daily chart, I know you guys make fun of me for showing this, but like, hey, if you got a template that works, like, why do we want to fight it? So we're a little bit further ahead, but we note that we get multiple cuts, notably 2, 1, 2, which is pretty much what happened here on the S&P 500. We put in go higher, 1 cut, 2 cut, and there is the immediate reversal. Notably today, the immediate snapback. And that is so notable because, well, we go all the way back up and then we form the higher high. So yes, I know the seasonality chart is when we're operating in a normal market, but let's look nice and close here for those people who cannot read. It says time frame for 20 years ending December 31st of 2022. So that includes the last 2 years, including the lockdown and including last year's big sell-off. So yes, it is a template, and it shows us here that, oh my goodness, these stocks are moving 3% a piece for the big tech. And then we look here to after hours, what is shaking out? Post-market, Amazon's up by 7. It was up a lot higher earlier. It is now coming down a bit. Not everything was all hunky-dory, though. When we look to the earnings calendar, we had Amazon out. We had so Amazon beat, Intel beat. Snap was down like 20%. Let's have a look here and see what it's doing here in after hours. So we got Snap. Snap was down. Yeah, it's down 20% here. So that's a dramatic cut. Cloudflare, they gave soft guidance, down 25%. Yep. So they beat, but they provided soft guidance. And this is also important because we note that this company beat by 100% on EPS. Their guidance is what really hurt them. Looking at Pinterest, this one was down to, what's it at right now? Down 13. So same thing. Whoa. Okay. Well, that's an incredible beat on EPS, beat on revenue. Hey, that's a 10% haircut. So this looks really interesting because when you beat, the gains are not quite as much as when you miss. Enphase was another one that was notable to me. We note here that, again, beat on earnings, soft guidance, stock got drilled. They got absolutely crushed. So what I'm really wondering with my spidey senses on is whether or not some of the smaller companies, again, we're not saying all of them, some of them are maybe just a little bit more cautious, like Cloudflare, like Snapchat, like Pinterest, like Enphase, or if this is what we should be expecting from big companies next earnings season, meaning in about 3 months. And again, if you wouldn't mind, please smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. Let's jump further. What else have we got here? Tomorrow, there's a couple of earnings out. Nothing really all that notable, though. So as we move forward here, we note that we had GDP coming out this morning. It came in at 1.1. We talked about that yesterday. Hey, it was an incredible buy. Why? Well, maybe the Fed's going to pause. But the thing that's really odd about this is that I'm seeing 2-year yield up pretty dramatically today, up by 3%. It's just an everything rally. This really feels like there is the squeeze on the bears are getting trapped, and we're going to have to defer to the number coming out tomorrow. So we also talked about this. This is something that I'm not 100% sure about. So we're going to look back at the charts in a moment, but that weekly and monthly chart closing price on Friday's close is going to be so important because it's going to tell us whether or not we're due for more or we're due for less. So we look here to core PCE. It's coming in line. Same thing with headline core PCE, which is the Fed's preferred inflation gauge. So the story for me is pretty simple. We look here to CPI on a year over year. It's been going pretty much straight down from 9 all the way down to 5, either every single month going lower or only once forming a double top here. However, when we look at PCE, which is the Fed's preferred inflation gauge, which is released tomorrow pre-market, well, it's going sideways. It's not really going down. So why is that notable? Well, because I mentioned to everyone, I think I mentioned this on the weekend deep dive, where I would have preferred if we would have dumped into the Fed. I don't really like us rallying because just like with earnings, and we went over those examples like Cloudflare and also with the example of Pinterest and Snapchat, if you rally into earnings, it makes it so much harder to keep going higher. It's not impossible. It just makes it more difficult. So If I was Jerome and I had my my thinking cap on, well, every Fed official has been out there chirping, saying higher, longer, blah blah blah. The PCE, which is what they says, also says that we know we're still having positive growth for GDP, and these large mega cap companies are still doing well, which means the economy is like not terrible. So if things aren't so bad, maybe they need to keep raising interest rates so that they can get inflation under control. All right. So with all that said, the two important areas I'll be watching for S&P going into tomorrow, I'll just go through those right now. We'll go through QQQ, and then I think I'll see if we have a few minutes at the very end here. All right. So for tomorrow, I'm going to be watching. There's actually three levels I'm going to be watching. The first level is going to be where we are right now. It's basically flat on the week at 4. Last week we closed out at 412.2. So 412 would be the first area. Also corresponds with that 41192 top we talked about. But the most important area for me is going to be this 410.17 area, 410.2. And that's going to be because that is where we have our weekly failed breakdown. So let's do something here to see if we can actually better understand what is happening. We're going to snap a line on last week's low. Let's look at a short time frame, which is our 15-minute chart. And we just gap and go today. So we note that we went gap up, push up, pump up. That's all we did, just gap and go. So we come in here, right? Boop, 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 grind it up. And then volume came in. So the volume came in as we got through that key resistance area, and then it just melted higher, higher, and higher. So that's really what I'm watching for. Are we going to crash land into Friday on core PCE? Are we going to hold up? And I'm not sure. So we went through all the levels. We got you really prepared for this week. The crash came, the recovery came, the seasonality chart is valid. So let's look here at one more, which is going to be QQQ or the Qs. We almost have a weekly bullish engulfing candle here, which means that we got a failed breakdown that started today. That was when we got back above 314.1. Yeah, then we squeezed up another 7 points. So last week's high is 32142. We're battling for that pretty much right now in after hours or post market. So I'll be watching really close. Also mentioned that volume is now getting a little bit more elevated, which means these bears are getting absolutely crushed. This is painful. It is torturous. And I'm sure they just want out. What is still missing, though, is a break above this area. So it's nice we got momentum. It's nice we're going back into greed. It's nice that we're going higher. What's missing, though, is that so from yesterday, from 51 to 59, it went risk on. The one part that's still missing for me is going to be S&P actually birthing the bull and going to fill this upper gap here at about 418 to 420. 418 births the bull. 420 would be a annual higher high for 2023. Otherwise, I don't think I have very much more to go through. So let's look at two more things here because I think I want to pay attention to this chart, which is SMH on the weekly. This looked a lot worse this morning. It doesn't look as bad now, but it's still a breakdown. It's still going down. So now even with Intel out, it's down in post-market. Decent day today, but it's down 2% on the week. I don't know why chips are not participating if we are really going to be going higher. For me, chips are in everything. This shows us the demand might be starting to wane a little bit. And then it's nice that we got big tech up, but man, Cathie Woods just cannot catch a bid. We're down by 5% this week, which means, well, if growth is going up, high growth or unprofitable growth should be going up a lot more. That's something that's missing. So ARK cannot even test its 50 DMA. It's just a strong sell. I'm not sure if this is voodoo or if it just means that the broader market is really just masking what is happening underneath the hood. So if we look here to our heat map year to date, let's look here to we're going to look to the day. So the day here shows us that everything had a nice broad-based rally today other than whatever this is, ABBV. But looking at the 1 week, here's where it's still not an everything rally. It looks like it is a tech-led rally. We look here to the last month. Okay, looks a lot better here. So broad-based in the last 30 days. But what about year to date? Most things are doing well, but even in energy, it's just the leader that's doing well. Rest are weak. Healthcare, leader is weak. Sector is weak. In finance, leader is strong. Sector is weak. Healthcare, health technology mixed. So if we're looking at the last 1 month, which is really when we had SVB until now, everything looks okay. These blocks over here, electronic technologies, look like they are a little bit soft. Tesla's a little bit soft. But so far, there's breadth, there's depth, which is what everyone said they were worried about as we continue to climb the wall of worry. So thank you so much for watching. I encourage you to watch the video now queued up here on the left-hand side. If not, I wish you all the best of luck into trading tomorrow, and we will see you for the final hour for our stream. Thank you so much for tuning in. Wish you good luck tomorrow. Thank you.